Rolf, thank you very much for being a guest on this podcast. My first question is: you studied business econometrics and operations research at the University of Tilburg. With this degree, you could have entered a number of different industries. What was your motivation to start working in the banking industry?
Well, so I graduated in two areas. So one was operations research, and that prepares you for roles in more the logistics and highly complex, multidimensional problems. And there was another way to graduate, and that's where I finally also kind of got my degree, which was more in business models or econometric models applied in the financial industry. And at that moment in time, we're now talking about 35, 40 years ago, right? When I graduated 35 years ago. There were kind of next steps in terms of capital asset pricing models, option models, forecasting models as to how markets would move, how you could put efficient portfolios together. So there was quite some econometric developments into the financial markets area. And that was basically the motivation for me to then go into banking.
That is out of intellectual interest, if you could
Exactly,
summarize it.
exactly,
Yeah,
exactly.
yeah. Because you have been someone who's always been associated with innovation in the banking industry. When and why does this become a big theme for you? Was that something you had kind of from the start, or was there a kind of moment where you said, "Well, here I can clearly see the value of innovation in our industry"? How did it develop itself?
So I think it goes back to the same thing. So when in my study, we learned how to code already, right? So because the models that you were developing were not necessarily models that you would work through in Excel. Excel was not existing at that moment in time.
Yeah, yeah,
So basically, you had to code your own models and test them and back test them, etc. So I was looking at modeling through coding. And at the same time, there was an area that was part of the same study, which was more like philosophy and AI. So already back then, AI played quite a role in terms of that at a certain moment in time, technology would be that far that one way or the other, we could build things that could mimic a human being. And that mimicking human beings, whether that was more in the execution electronically or thereafter automation of processes or the user experience in digital, that has always been playing a big role in the financial world, right? So, and
yeah,
wherever I found assignments, in all of my jobs where I found assignments, I've always looked, specifically also later in my career, as to where, looking forward, looking at models, looking at technology, how that could actually help you improve the business, not how it could basically support the business, but how it could be is a differentiator in how you could do things. So how
yeah.
could it be really determining that you do your business differently? I think it's more like that why I've always looked at innovation one way or the other, whether it was more like fast innovation or whether it was more like a continuous improvement. But those are the areas where I found where I always wanted to apply technology.
Yeah. Yeah, because talking about technology, there's a lot of discussion nowadays about the degree to which fintech companies pose a threat to traditional banks. Because traditional banks often have a different cost structure, talent base, and sometimes compliance requirements than fintech companies have. How do you see this playing out in the coming decades? Should traditional banks be worried? Do you think there are market segments where traditional banks will always prevail? For instance, investment banking. Should banks consider acquiring or engaging in strategic collaboration with fintech companies? How do you see this world and this playing field evolving?
Well, actually, I think it's actually all of the above. Just to give you, so just to give you a bit of a background, I think that technology, and whether it was from within the banking industry or whether it was coming from the outside, has always played a role to push banking forward. And honestly, I think the first ways to apply technology in banking was actually disrupting investment banking. Since you mentioned it, people think, well, investment banking is not necessarily disrupted by technology. It's quite the contrary. The actual core function of the investment bank, the way it was, which was trading, for example, or which was the execution of a deal, the electronification with supercomputers back then, how you could accelerate the trade, how you could basically put the trade, make the trade electronic rather than through people on the trading floor, shouting at each other. I think that was the first step, right, where technology played a big role, improving or disrupting the way of working in the investment bank, specifically on the trading side, and that has never stopped until literally today, where we see that the traders are literally coders/engineers. So the traders today, they write the algorithms and they code their own algorithms, right? So that's a field that was particularly already from early on, I'm talking the 80s, disrupted by it. And you see massive players from the outside the traditional banking industry, the hedge funds, for example, that have picked up a lot of that in the market. Then you saw the automation coming in, but basically more the processes. How can we do things more efficient? How do you make sure that things are, in terms of processing transactions, become less error prone? And that was the automation side. That was not necessarily a way through which outsiders could disrupt. Then the third, I think, wave was more the digitalization. And that is where And that really started to disrupt, because now, through digitalization, new players could actually get access to consumers directly. And it was all about the user experience and making things easy rather than make things clunky. And that's where banks were hit the first by outsiders, because banks had systems that were not as easy to change. Banks had legacy, they had cultures that were slow. And of course, banks have capital, they have a role in society, they have to be cautious, they have to be prudent. And indeed, when the digitalization came through, then you saw FinTechs taking a lead through the fact that they had no legacy, they could move faster, they could experiment faster, all the way until they actually got regulated as well. But I actually think that FinTechs are both a way for banks to learn and to team up. But of course, there is FinTechs that basically have carved out a future for themselves independently, like an Adyen or a Revolut or Klarna. And they are big businesses, right? And they are really disrupting the banking industry. So I think the next step is more where intelligence gets into the industry, which is AI, basically. And then there is different areas in the bank, like wealth management, that may be subject to quite some change through the possibilities of technology and AI.
Yeah, because you just mentioned the word culture, and you once said in an interview that a culture change is required to enable banks to cooperate successfully with fintechs. And you're also seen as a true advocate of concepts like agility. Now, you worked for two of the largest banks in the world, and how can leaders in the banking industry, which from a process and culture point of view is often seen as prudent and conservative, change the deeply ingrained culture of their institutions?
Well, I think there is no choice than having to do that. So just going back to the previous question, where you have indicated that there is this massive change coming at banks through fintechs or through technology that either needs to be adopted by banks because because that's where clients expect banks to be. Now, if in a world where technology plays such a big role, you have to move with the opportunities of technology, then you have to adapt. But the adaptation in your strategy, and also the adaptation in the implementation of new technology, can only happen if at the same time you tweak the culture for that to be successful, right? We all know that culture eats strategy for breakfast, right? So whatever your story is, whatever your foresight is, whatever plan you have, if you don't also look at culture, and in this sense, culture, in my view, is behaviors, like open to change, embracing opportunities, then you will not be successful. Now, in the change from a more waterfall planned technology change in the bank to a continuous improvement change in the bank that you need in order to be successful, to make technology your differentiator. And therefore, you have to kind of make small changes every day rather than big changes every quarter. If that is what you want to do, then you also have to change the way you work. And that's where Agile came in our case, right? So an Agile is a completely different way of working, where rather than that you have a marketing team thinking about the future and giving some market research to the product development department, and they come up with whatever product could be successful in reaping that market opportunity. And then you bring it to the organizational department that basically develops a process, and then they send the requirements to the technology department for them then to kind of program something in order to support all of that. And you're like 18 months into it. Rather than doing that, the whole idea of Agile is that you take a couple of people that have a marketing background, a couple of people who have a product background, compliance people maybe for a while, for a couple of sprints, technology people, and you put them in the same team. And while they work in the same team, rather than that you do these large projects that may take 18 months and even longer, you do small changes every day or every week, and you check whether you're progressing into the right direction. So Agile working is working in multidisciplinary teams in short sprints, where every 2 weeks you check whether you are making progress and whether the business case is still valid and whether clients are picking up the changes that you are making, and otherwise you just stop, right? And in order to do that, in order to be successful in that, you have to be open to collaboration. You have to take more responsibility, because the actual decision making is much more close to the ones who do it rather than in the leadership. So that's and so if you need more collaboration, if you need more empowerment, and there's also taking accountability, that in itself is a culture change in most of the banks. Yeah. And that's why it's so important.
Yeah. And how did you make that happen, Rolf? Because if you come in with these kind of concepts in a rather, let's say, traditional culture, how do you get the engagement, let's say, of your peers, of your teams, of other key players in the bank? How do you get them interested, and how do you get them going?
Well, I think we should never forget that banking itself and the way banks make money is a way that only changes slowly. So banks generally have big balance sheets, and these balance sheets generate income. Yeah. And the income is not lost tomorrow, because the balance sheets will continue to be sizable, except for the trading side. The trading side, these guys have to work every day for their P&L. But the asset managers and the banks that have assets on the balance sheet, they generate income all the time. So it is very difficult to install a burning platform. So you've got to come out with what I always call a burning ambition. And burning ambition is always one where you need to have a compelling story for people to see why they need to change, but not as a negative thing, but as to a compelling story as to what it is that we are going to generate. So it's a very constructive, compelling story, where, of course, outside trends play a big role for the need to change. And then with that, and in order to be able to achieve that story, you also have a discussion around that we can't do that if we don't change the structure or the governance, that we can't do that if we don't change the culture or the behaviors, as I was referring to, and that you can't do that if you don't adapt to some of the capabilities or the skills that people have in order to be successful. So the massive change that sometimes you need to do, you can only get people motivated to accept and embrace if at the same time you have a compelling story that people really buy into. And it has to be based on a burning ambition, as I said.
Yeah, I love that. I love, let's say, the change from burning platforms to burning ambitions. So that's a great statement. I'll definitely use that sometime in the future. Ralph, the banking industry does not have a great reputation, especially since the financial crisis in 2007, 2008. Do you think this reputation is hurting the interest of the industry? And is this something that the industry just needs to live with, or is this something the industry should actively and perhaps collectively address?
So, in terms of the answer, so the second part of your question is very clear in my view. You have to do it collectively. It's very difficult to be an individual bank and step out of your category. It will help, and I think you will always see leaders and followers in that respect. But it is the banking sector collectively that has to improve, and I think that since the crisis, they've really been doing that. So crisis is now almost 15 years behind us, and massive progress has been made. But the developments leading into the crisis were not only due to banks, it was also due to economic policies, and we all actors, companies, governments, and banks alike, we thought that we had found the formula for eternal growth, which just wasn't the case, right? So, and I think we all learned from that, and banks the most, because that's where the biggest part of the crisis manifested itself. The reason why I think it manifested in banks is because banks started to believe that they were they had a primary role in all of this, whereas banks only play a secondary role in all of this. So banks are supportive of actors in the economy, whether it's a company that needs a loan to make an investment. It's the investment that the company needs to make. It is not taking out the loan, right? That's not.
Yeah.
And if you wake up in the morning, you don't think about, okay, I want to do a couple of payments today. No. You go shopping, and in order to be able to do shopping, you do a couple of payments. So I think within the banks, it was important for bankers to realize that we were not a primary actor, but a secondary actor. And as a secondary actor, it is all about supporting the economic development and taking that role seriously. And be prudent in that, being a very considerate actor in that. And that's what we have learned. And from there on, therefore, I also think that you can only do this collectively to really improve your reputation. But as said, luckily there are also leaders that others can follow.
Yeah. Because partly also as a result of the financial crisis and the fallout of that, the banking industry started to suffer from increasing compliance costs. And I worked in a compliance role myself in Credit Suisse, and it was at a certain moment really unbelievable. At the same time, technology is making tremendous progress. Do you expect there will come a point that technology will actually start to drive down the relative cost of compliance in the banking industry?
It's a good question. There will be a moment, indeed. There will be a moment in which technology may drive the cost of compliance down. At the same time, banks do have a very important role in society, as I was just referring to, in making sure that the way your payment systems work, that you have the right filters to detect payments of bad actors. We have to make sure that the products that we design are transparent and for our clients to understand. So there is a lot that we need to do in order to make sure that the way we do our business is truly compliance with the expectations, if it is not even the law. Certainly also with the expectations of society. And the more technology develops, you would indeed expect that the cost of technology and therefore with the cost of compliance may actually go down. But I actually think that we're still in a phase in which the development of technology makes it possible to be even more effective in compliance. And therefore, the requirements or the expectations that we all have for banks in order to be compliant are on the rise.
Okay.
So it's like whenever you see that there is with new technology, you can even do a better job, then the requirements will increase as well.
Yeah.
Right. I think we're still in that phase where you have just to look at the opportunities of technology and see how you can do an even better job, and not just the job you're doing at that moment in time.
Yeah.
And specifically with the introduction of the incredible processing capacity that we see, and with that the AI applications that we are all, in my view, having to implement also in the banking system, in making sure that you understand your client really well, and making sure that the products that you advise are the right products, that the actors that use your bank for the financial system, that you can test them on a real-time basis, et cetera, et cetera, et cetera. I think with the next wave of AI and the processing capacity that we see with the current chips, I actually think that the requirements will continue to grow for a while before that will stabilize. And with that, then maybe the next phase of technology.
The tipping point comes. Yeah,
exactly.
yeah, yeah.
Exactly.
Yeah. If I move on to leadership, I think being a CEO is I think one of the hardest jobs in the world, especially in, let's say, companies that have different business units, each with their own markets, outlook of the markets, sales force. I think banks often have completely different and technically highly complex product lines, each with a specific group of clients. At the same time, it is of course important that that group of individuals works together as a team. How can you instill, let's say, a team spirit in such a kind of diverse environment?
Yeah, I think there's a lot in your question, actually. So because I heard about complexity and then team spirit and different responsibilities. So the first thing is that however much we want banking products to be simple, it is really difficult to make banking products simple. And that is because in the core bank, like the core business of the bank has money that is on call because our clients bring savings that they want to be able to access every day.
Yeah.
And at the same time, these same clients want to have a 30-year commitment of the bank to buy a house. So there's a massive mismatch between one-day money and a 30-year commitment, because if the banks would be simple to manage if we could say, well, but then we should also be able to call the money from you when you've bought the house. Right?
Yeah. So it's now 27 years into your mortgage, but unfortunately we now need to...
we now need it back, right? So it's like, and that is not the case. So the core role of banks in terms of maturity transformation, as we call it, makes it generally pretty difficult to manage the bank. And with that, the product features to make sure that it works. And of course, this is also why we are a highly regulated industry, to make sure that we manage this mismatch in a very responsible way with the level of buffers in order not to expose a risk to society. Now, having said that, indeed, then you will see that some of these activities are more in one division and others are more in other divisions. And it is for the top team to understand as to how that all fits in the bank, because everything that you do in a bank impacts each other. It's almost like a managing of a Sudoku with a Rubik's Cube, right? Yeah. It has many dimensions. So if you change a product design here, you will find your balance sheet moving in a different direction, as a consequence of which you may need to have more capital, more liquidity, or design a different product on the other side of the balance sheet. And therefore, you need to work as a team. Now, how do you make sure that you can work as a team in any industry, by the way, in my view? And there's also in the banking industry, that is by first making sure that you have a clear vision, that when you developed it, this compelling story that we were just talking about, that when you develop the compelling story, that you don't do that, from paper. You do that basically fed by people who do a lot of research, but that as a team you understand, okay, these are the issues, these are the challenges, and these are the opportunities. And based on the issues, challenges, and opportunities, this is the story going forward. Yeah. And just going through that process together creates a lot of buy-in in the team. That is one. Then the second thing is that within the team, you got to look really closely at their KPIs so that the KPIs of the team are also aligned, so that people, as to what they are expected to do in order to support this story, that these KPIs, these key performance indicators, one way or the other, are connected to each other and they see each other's KPIs. You have to be very transparent to show your top team who has which KPIs, and some even have the same ones, and making sure that within the team, you have couples or people, the three people, that work on the same thing for the next year, because they have to work on that. So that's the second part. And then the third part is, in the end, that if you put a good team together, a well-balanced team together, and you are able to insert a altruistic culture, right? That people don't mind supporting each other, that one way or the other, they also one way or the other see what is the synergy effect for them getting something back. So basically, you got to show, okay, beyond the responsibility that this team member has in order to deliver for the team member, him or herself, has skills and capabilities that can help you as an individual as well to develop.
Yeah.
And so it's those three layers. It is the story that you need to buy, that you need to build together. And then it is the alignment of the KPIs. And then it's the alignment of the team in terms of the more personal sense as to where each other's skills and capabilities are.
Yeah. That's a beautiful story. And I love the part where you said that you basically go on the same kind of, intellectual journey as well, as in the sense of, you all have the same data, the same understanding, the same trends, and you collectively process that. That's a very, very powerful thought. Another thing, what I've seen you do a lot in interviews and in videos is stress the importance of ethics, of the value we have for society. How can you, as a CEO, implement an ingrained sense of ethics in an organization? How can you basically, to use a popular term, how can you scale that?
Yeah. In the end, it's about the business you're in, right? And the banking business, at least the way I grew up as a banker, ethics has always played a very important role. How do you deal with information? How confidential do you treat the information that you have for clients? How integral are you in terms of how you manage your processes? So ethics around behavior and values has always played a huge role in banks. And I think that the crisis reminded us of the importance of that, right? So because I think maybe some here and there had lost that countervailing power, more or less. And I think with an ING, we started from day one in the restructuring. Thereafter, when I took over, I found it very important that next to the compelling story and the changes in the way we would work, that we also accepted and embraced a new code, which was the Orange Code, as we call it at ING, where you have 3 values and 3 behaviors that people have to adhere to, but that you have also, one way or another, translated in a very concrete way for almost every job as to what they mean. Because it's very easy to write a couple of values, like you have to be integer, you have to be accountable, you have to be responsible, etc. It's all
and
very easy.
They also look alike.
Exactly.
all these statements.
Exactly. So it's all easy to write down as a value. But what we did at ING very quickly is we made sure that almost per role that we could see, but what does it mean in your role? And what does it mean in your role? So how do you take responsibility in your role? And then the next step was that those values and behaviors, Orange Code, and the 3 keys, as we call them at UBS, that you also get appraised against them. So your appraisal is not only against the KPIs and whether you have delivered on the requirements or the expectations in your job for that quarter or for that year. But it's also important whether you delivered them in a way that is in line with our values. and the behaviors. And that should be almost like a 50-50 weighting, because if you constantly deliver your scores and your expectations on your expectations with the wrong behavior, that is not good. You don't want that. So you rather have people who perform a little bit less, but with the right behavior, than that you have people that outperform with the wrong behavior.
Yeah.
Always. And therefore, so how do you make that in a framework, and how do you basically put that pyramid in your organization? It is that, of course, it is all about walking the talk, right? People do as the leader does. So the leader has to show the example. The leader has to preach the orange code. The leader has to preach the 3 keys in UBS and show that he or she lives and acts according to those codes or those keys, and then make it also clear that the top team and every team below has similar KPIs, not only on the performance requirements, but also in how you deliver the performance, and that's how you can scale it.
Rolf, we touched on a number of different aspects around banking, innovation, leadership, and ethics. Are there any elements we have not discussed that you would like to mention or think is important to say?
Well, I mean, we can go on forever, I guess. There's so much to touch upon, but I think banking industry or any industry alike, if you're a leader in any industry, you should realize that change is the only constant, right? Things are constantly changing, whether it's because of geopolitics, whether it's for economical circumstances, whether it's for regulation, whether it's because of new technology or new inventions. So there's no industry that is not touched by change, and change is constant. I think that's the first thing that we all have to remember. And in that change, the question is, do you want to be a leader in that change, or do you want to be a follower in the change? If you want to be a leader in the change and make it an opportunity for you, then you have to look outside of your industry. If you want to be a follower in that change, then just look at your peers, right? And so there's no judgment whether you want to be a follower or a leader, but it's very difficult to be a leader in the change in your industry if you just by looking at your peers, right? Yeah. Because then you go in circles. Yeah. So you got to take the inspiration from outside of your industry, and that's what I've always done. I've always looked at other industries and thought of what is happening at Google, what is happening there, what is happening at Spotify. How did they do that? Why can they change so quickly? How can I apply AI into our business? Which parts of our business will be disrupted first? Yeah. What are synonymous activities or similar activities that have gone through a massive change? And one thing for sure, specifically in the banking industry, like any industry that deals with intangibles, right? Money is intangible. There is no fungible good. There is no physical good you deal with. Yeah. So those industries are always much more prone to be disrupted by new technology than any other industry. Yeah. Right? Like the music industry has always been prone to disruption, whether it was more on the technical side, from a record, right, a vinyl record, to a CD, to digital, or whether it was the Gagonomics, which basically with Lady Gaga basically circumventing the whole chain of recording a record.
Yeah, the whole value chain.
The whole value chain was disrupted by her because she went outside, right? So if you see that happening, in different industries, watch it. It's going to come to your industry as well. And specifically in banking, since we're dealing with intangibles, almost everything can be digitalized. I mean, not exaggerate, almost everything can be digitalized. Yeah. And in banking, because we're dealing with money, and therefore look outside of your industry if you want to be a leader. If you want to be a follower, again, could be a very good strategy. Look at your peers.
Super. Rolf, thank you so much for this interview. I really enjoyed it, and I learned a lot from you.
You're welcome.